So this is a teacher Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris, right? So today we are going to solve a question of business purchase, which has come in February, March 24, 32. A2 accounting, business purchase, February, March 24, 32. Obviously it's our variant. February, March का हमारा ही variant है ये, जो कि हम जो है वो solve करेंगे. So let's see. February, March 24, 32. Question number 1. Ada and Brain. Okay. Ada and Brain had been in partnership, sharing profit and losses equally. So they were having equal partners, Ada and Brain. They had contributed the same amount of capital. So both have contributed the same amount of capital, right? On 1st January 2024, Ada's overdrawn current account balance. एक minute. Okay. On 1st January, Ada's overdrawn current account balance, it means that it is a debit balance of 3,900, while Brain's overdrawn current account balance was twice that of Ada. It means that Ada's current account balance was 3,900 and Brain overdrawn current account balance was twice that of Ada. It means that it is double of 3,900. So it will be double of 3,900, which we are going to do like this, right? So this is, we will, okay. So next we are going to do, oh, there's a voice coming. इसको निकाल दिया यार. Okay. So on 1st January, Ada overdrawn balance is 3,900 and Brain overdrawn balance was twice, so double हो जाएगा. X Limited was formed on that day to acquire Ada and Brain's partnership business. The terms of the acquisition were the purchase consideration 3,60,000 would be settled by issuing $1 ordinary share at par value to the partners equally. So it is clearly stated that the purchase consideration is $3,60,000 with $1 ordinary share at par to the partners equally. It means that we are making the payment of 1,80,000 shares to Ada and 1,80,000 shares to Brain. Each partner also agreed to subscribe 20,000 for their personal resources for additional shares. They have purchased more shares of 20,000 each in the company, in the new company. All assets and liabilities would be taken over by X Limited after the following revaluation. Equipment increased by 5%. Book value is given. Inventory decreased by 3%. Trade receivable decreased by 2%. Cash and cash equivalent, no change. Trade payable, no change. There is one more thing which is very important in this question. In this question, cash and cash equivalent is also taken over by the new company, which is X Limited. Generally, it doesn't. We are not supposed to find such type of question where cash and cash equivalent is also taken over by the new company, which is X Limited. But here, it is clearly stated that all assets and liabilities would be taken over by X Limited. Ada and Brain would be the directors of the new company. February, March 24, 32. Prepare showing the adjustment made during the acquisition on 1st January. The capital accounts of Ada and Brain show the final settlement to or from each partner. So what problem we are going to face first of all? The problem which we are going to face first of all is that we have to prepare obviously partners capital account at the time of, partners. Let me prepare capital account at the time of purchase. So we have to go for revaluation also. Yes, obviously Ada and Brain. And on the right side also we are going to write Ada and Brain because I have to go for a capital account of Ada and Brain. But you know that when we are dissolving a partnership business, their capital accounts are going to be closed with, yes, shares. And if there is any remaining amount, it will be closed with the name bank account. But in this particular question, we have also to prepare the realization account. So that realization profit will be transferred to the partner's capital account. But first of all, the problem is this, that we don't have a brought down balance of Ada and Brain. So brought down is not given. Any capital account balances are not given in the question. If you just look at the question, book values are given on 1st January 2024. Current account balances are also given. which is negative. Assets liabilities are also given, but capital account balances are not given of ADA and Brain. So how we are going to prepare the capital accounts? If you want to go through the adjustments, which is revaluation, transfer of current account, obviously transfer of current account, okay, realization profit, what should I say? Not right. We have to go for that. So and then transfer of ordinary shares, and then the account will be closed with the name bank. But the problem, final settlement 2 or from each partner. That's why he has written that. But brought down capital account is not given. So we have to find capital account. How come, sir? Assets minus liabilities. So we have equipment, book value of equipment. Then the book values are given. Equipment, inventory, trade receivable. I will write here. Equipment, inventory, then trade receivable, right? Then cash and cash equivalent, cash, right? Then these are the all assets. I'm going to write it down. 2,30,000, 52,000, 72,000. So let me write 2,30,000, then 52,000, 72,000, 72,000. And cash equivalent is going to be how much? That is 18300. So can you go for the total of this? Because this is the total of all assets we have. Remember that we are going to find asset minus liabilities. I'm going to find the capital account balances. So can you please find the total of this? This is the total of total assets actually. Okay. 2,30,000, 52,000, 72,000 plus 18,300. So what is going to be the answer? Nobody is telling me. Only 2 students are here. Okay. What is going to be the answer of total assets? Okay, thank you. So that is going to be 372,300. So let me write here 372,300. This should be equal to the total capital and liabilities. Obviously, this should be equal to the total capital of ADA, Brain, and their current accounts, which we know already, which is negative balance, and the current liabilities of trade payables, because there is no current liabilities, and the trade payables are 64,000. Let me write here 64,000, and the total is going to be the same. That is 372,300. It has to be the same because we are just going through the accounting equation that assets is equal to capital plus liabilities, and capitals we don't know. But in the question, it is clearly stated that the capital of the partnership, Allen and Brain, are equal and they had contributed the same amount of capital. Profit loss is also equal and they've contributed the same amount of capital. Now the current account balances of ADA is 3,900 and the Brain is double balance, but it is negative. So the current account balance of ADA and Brain 3,900 and the double of that. Can you please tell me? 3,900 plus double of 3,900 is 7,800. And if I'll go with total of this has to be in negative because it's debit balance of current account. So what is the total amount of the negative balance of ADA and Brain? The total, I think it is going to be 11,700. Okay. Now what you are going to do, that is negative 372,300, right? 64,000 is added, it will be subtracted, and 11,700 is added to find the total capital of ADA and Brain. So please tell me, what is the total capital of ADA and Brain? How I'm going to calculate it? I will go reverse. This 372,300 should be the total, right? And it has come when trade payables are added. So 372,300 minus 64,000 plus 11,700. You will get the total of ADA and Brain's capital, which should be equal because they have contributed equal capital. They clearly stated that. So the answer is going to be how much? That is 3,20,000. 3,20,000 is going to be the total capital of ADA and Brain. Now they have contributed equally. So the capital of ADA is 1,60,000 and the capital of Brain is 1,60,000. So that's how we have found the capital of ADA and Brain through this way. So we have done that, right? So we have calculated the capital of ADA and Brain by going through the accounting equation that assets equal to capital plus liabilities. We have current account balances, negative current account balances of ADA and Brain, 3,900 and 7,800, double than ADA, 11,700. Trade payables are given 64,000, and we have gone reverse. 372300 minus 64,000 and plus 11,700 will get 320,000, and the equal contributed capital is there, which I have made you write. ADA and Brain 1,60,000 and 1,60,000. So we are done with that. Now let's go with the realization account, because I have to write the realization profit in the accounts. So let's prepare the realization account, which is very easy because there is no such disbursement of, we are not able to sell out any assets. Trade payables are not being paid also. All assets and liabilities are being taken over. So I will go with the purchase consideration entry. I will write here equipment. How come realization account debit, assets credit with the book value 2,30,000, then inventory, that is 52,000. Then we have trade receivable, that is going to be 72,000 with the book values. You know that in realization account, we always write book values. Then cash, that is 18,300. This is the only question in which cash has come in realization account. It used to come in the previous questions, very old questions, like in, I believe, 2010, 11, you will find such type of questions where cash is also taken over by the new company. Now here comes the trade payables with its book value, because it is transferred to realization account. And then I'm going to write the purchase consideration, which is already given 3,60,000. And the name of the company is X Limited. The entry will be X Limited debit, and realization account is going to be credit because of X Limited with the purchase consideration 3,60,000. So we can easily find the profit on realization. Go for the total of the credit side, subtract it, and both ADA and Brain is going to get the realization profit equally, because they are equal partners in the question. So the profit on realization is going to be 51700. I will write here 51700, right? And the difference, the profit is going to be transferred to ADA and Brain equally, which is going to come 25,850, and again 25,850 for Brain. Okay, now I'm going to transfer the realization profit here. That is 25,850, and for Brain 25,850. So we are done with realization profit also, and we have calculated the capital accounts of the ADA and Brain starting capital. And now I'm going to prepare the partners capital account. So I've posted the realization profit, which will come on the credit side, increase in the capital accounts. And now the current account balances are going to be transferred. So they are debit balances, they will come on the debit side, because of that, the capital accounts are going to decrease. They will reduce their value. So ADA current account balance is 3,900, and Brain current account negative balance is 7,800. Now I'm going to transfer the ordinary shares, which they are going to get. ADA is going to get the equal shares. How many? 3,60,000 is the purchase consideration. We are done with that already. And all the purchase consideration is settled through issuing shares to the partners equally. Here it is written. The purchase consideration is 3,60,000 would be settled by issuing $1 ordinary share at par value to the partners equally. This particular thing will not be, accounted for, because each partner also agreed to subscribe 20,000 for their personal resources. For additional shares, they have purchased share of the X Limited. So they are now shareholders of the X Limited with the dollar of 20,000, and with the shares which they have taken in the form of purchase consideration with both. But this will not come. $20,000 will not come. So here comes 1,80,000 ordinary shares. And for Brain also 1,80,000. So let's go with the total now. And whatever difference we are going to have, that will be closed with the name cash or bank. So we'll close it with the bank account. So if you solve it, you can easily calculate that we will close with the name bank. Just a minute. The terms of the acquisition would be the directors prepared showing the adjustment made during the acquisition of 1st January, the capital accounts of Arda and range for the final settlement to or from each partner. Okay. So that is the thing. So here comes the bank here. The difference of Arda is coming here bank with 1950, and the same amount of bank will come over here with 1950, but that is going to become on the right side. The one partner is basically making the payment to the other partner. So I've written the name bank to both sides. And the total is going to be 185850 here. 185850. Total will come also here. Same 185850. And the difference will be written with the name bank as I have written 1950. Other person total is 187800. The debit side is heavier for him. For brain, 187800. Here comes also 187800. And the difference is going to be written with the name bank. So this is how we have prepared the partner's capital account. We have calculated the opening capital first through assets minus liabilities on 1st January at the start of the year with a negative current account balance. Then we have prepared the realization account. The purchase consideration is given 3,60,000. Profit on realization will be transferred to the Arda and Brain capital account on the credit side, 25850, 25850, because they share profit and losses equally with equal capital accounts also. Then current account balances will be debited and they have been given as a purchase consideration, which is 3,60,000, is supposed to be paid to them through ordinary shares and they will be distributed equally between them. So 1,80,000 and 1,80,000. So any problem till here you can ask me, because otherwise then I will move to the next part of the question. We are done with this particular part of the question. Now, the next part, it clearly stated that after preparing this particular stuff, 11 number is there, prepare the statement of financial position of X Limited at 1st January. So all the working which we have done here, the relation account, the partner's capital account, that is from the point of view of the dissolution of partnership, the firm which is going to be dissolved. Now we are going for the working from the point of view of the new company, which is X Limited, because the examiner has asked us to prepare the balance sheet of X Limited. And for that, we have to calculate the, goodwill. And we have to go for the calculation of goodwill also. So statement of financial position, spelling galat hoga doesn't matter. So let me write here, $sign. I used to start with non-current assets. But the problem is this, that I have to find the value of goodwill. So let's calculate now. So we will use the revalued amounts. We will use the fair value of assets taken over, right? Less liabilities taken over. We will find the net assets. Then it will be compared with purchase consideration to find the goodwill amount. So equipment inventory, let me find here. Calculation of goodwill. I will write here equipment, then inventory, trade receivable, cash and cash equivalent. Then comes trade payables, which is going to be a liability taken over, and we'll get the net assets. Then these net assets are going to be compared with the purchase consideration to find either there is a goodwill or there is going to be a capital reserve or negative goodwill. It is also possible. Remember this, we have questions where we are going to have negative goodwill. Previously, it was called taken as capital reserves, but now it is used as negative goodwill and it will be subtracted from non-current assets if there is going to be negative goodwill. So let's see. Equipment value is going to be increased by 5%. So what I will do, 2,30,000 into 5%, and I will add them up with 2,30,000. This will become 241500. So I will write here, right here, 241500 is the value of the equipment. Then comes inventory. Inventory is 52,000. It is decreased by 3%. So I will calculate 52,000 into 3%. I will subtract 3% from 52,000. You can also do like that you can calculate 52,000 into 97%. But I will go with the normal procedure. So that is going to be after subtraction 3%, that is 50440. So let me write here 50440. Now the trade receivables. Let's see. The trade receivables are 72,000, decreased by 2%. So I will calculate 2%, I will subtract it, that is 70560. Okay. Let me write here. These are the assets taken over by the new company, and these are the fair value of net assets, fair value of assets. Then cash and cash equivalent, the value will remain the same. It does not change. It can't change also, 18300. Now I will calculate the total assets, and I will subtract the trade payables, and the value of the trade payables is still the same. The trade payable taken over, that is going to be 64,000. Can you please tell me the total of assets so that I can subtract and I can find the net assets? Yes, please. I mean 241500 plus 50440 plus 70560 plus 18300. So the answer is 380800. Okay. So let me write here 380800 minus 64,000. So I will get the net assets, which is very easy, 316800. The purchase consideration, which is decided between the two parties, X Limited and Ada and Brain, is 3,60,000. So it means that we are making more payment, okay, the over and above the net assets of the business, and that is going to be the goodwill. So the goodwill is going to be 43,200. So I will write here goodwill 43,200. Now I'm going to go for the preparation of the balance sheet. So I will go with net assets first, non-current assets first. So non-current assets is going to be how much? Including the goodwill amount, that is, remember this, if the non-current assets of X Limited are given in the question, we have to add the new values of equipment, inventory, right, in all the non-current assets of the new company, okay, for the answers to get the non-current asset amount. But here it is not written, so we can do it easily, like non-current assets, which we have calculated, that is 241500, because the previous figures of X Limited, which is newly formed, is not there, is not given, and it has to be not given. Why? Because Ada and Brain are going to be the directors, and they will start this new company X Limited. So there will not be any previous balance sheet available or previous assets available for the company. So goodwill is now, it is a purchase goodwill. It will be recorded in the books of account. That is 43,200. Purchase goodwill is recorded in the books of account. So the answer is going to be 284,700 of total non-current assets. Now I'm going to write the current assets. Current assets, you know that I am supposed to write the closing inventory first, then comes trade receivable, then comes cash and cash equivalent. Okay. So the closing inventory which has been taken over is 50440, right? Let me write here. Oh, sorry, 50440. The trade receivables are going to be 70560, same amount which is written over there in the calculation of goodwill. And cash equivalent is an important point. That is 18300 plus 40,000. 18300 plus 40,000. Sir, how come? I will show you. Because we have purchased new shares of the company. We have invested more dollars in the company of 40,000, and the new share capital has been introduced 20,000 by each Ada and Brain. So the entry is going to be bank debit, and share capital is going to be increased by, because $1 share is there. So 20,000 into 1, 20,000 for Ada, 20,000 into 1, 20,000 for Brain. So $40,000 has also been added in the bank account, and the shares will also be increased by 40,000. So the cash and cash equivalent is 58300. Can you please get me the total of this? Total of, current assets. Then I'll get the total of the total assets. So the answer is going to be how much? 179300. So let me write here 179300. Now I'm going to write total assets here. So total assets, non-current and current assets, it is going to be 464,000. Yes. Now I'm going to write the equity and liability section. Obviously, it should come the same. First of all, I will go with the ordinary share capital, which I have already calculated, that we have issued shares of 360,000. Sir, how come? 160,000 for ADA, 160,000 for Brain, right? And 40,000 new shares have been introduced by both of them together. So that will become 4 lakh. Okay, I can show that 3,60,000 plus 40,000 becomes, right? Next come the current liabilities, because there is no non-current liabilities given in the question. Otherwise, I would have written that. And that is going to be trade payable of 64,000, which has been taken over by the new company. So now you can find the total, and the total is going to be the same for both the partners, for the company. Total assets equal to total equity and liabilities. That is 464,000. Okay, so we are done with that. If you have any question, you can ask me. Total equity and liabilities, right? So there are two parts of the question. One is for the resolution point of view. I told you that he used to give the both parts in the same question, and this time also the question will come in the same manner. कि आपको दिया होगा, it will be given realization account, partners capital account, and then you have to prepare the balance sheet of the new company, or you have to prepare the entry, the double entry for the purchase for the new company, the business purchase entry for the purchase. It can be done by that. Why aren't we considering reverse? Reverse RS क्या है? I don't understand. Revaluation reserve. There is no revaluation reserve. Revaluation reserve comes only, right, when the assets are going to be revalued upward at the time of revaluation. That is not because of the trading activities of the business, or that doesn't come in the at the time of business purchase. That is not revaluation. That is the fair value of assets taken over and above the net asset of the, which is known as goodwill. Revaluation reserve created when, without any trading, without any acquisition of a new business, the assets value will increase. Then revaluation definitely come. Revaluation reserve will also come, but not in this particular part of the question. Okay, let's go with the next part. And it says that Calvin, a friend of Brain, is interested in investing in X Limited. Ada and Brain are considering raising additional funds for a project. The directors have two options. Option 1, issue 4% debenture to Calvin. Ada and Brain had been entitled to interest on capital at the rate of 6% when they were in partnership. The annual interest of the debenture issued will be the same value as the total interest on capital in the partnership. So the debenture which has been issued to Calvin, that is 4% debenture, but we don't know the value of the debenture. But the 4% debenture, whatever be the value of 4% debenture, the interest on debenture should be equal to the ADA and Brain interest on capital, which is 6%. So let's calculate the interest on capital of ADA and Brain. So ADA capital account balance is 1,60,000 and the interest is 6%. So it comes 9,600. Brain capital account is also 1,60,000 into 6%. So again, it is going to be 9,600. If you go with the total interest is 19,200. And the question says that it should be equal to 4% of debenture, because the total interest should be equal to whatever interest they are getting on their capital. that should be equal to 4% of debenture. Let's talk about it again. Issue 4% debenture to Calvin. Ada and Brain have been entitled to interest on capital at the rate of 6% when they were in partnership. When they were in partnership, their capital accounts we have calculated that is 1,60,000 and the 6% of that is 9,600. So go for the total of this. We will get these are the capital accounts we have calculated. So 19,200 is the total interest on capital for both of them. And we are making a payment to of debentures, 4% of debenture. So debenture value is going to be how much? 19,200 divided by 0.04, which is 4%, will get the amount of debenture. So how come it is going to be? What is the amount of debenture? We can calculate. That is 4,80,000. So we have calculated the amount of debenture. That is 4,80,000. If you calculate 4,80,000 into 4%, you will get the same amount of total interest on capital, which is 19,200, which the both partners, Ada and Brain, are getting from partnership as their interest on capital, right? So it is not stated that we will, normally it is stated that we will receive the same amount of interest, right, as we are getting on interest on capital or interest on loan. But here it is given that 6% amount is we have calculated first and 4% of debenture, and we have divided and we can find out the answer. It is the same that the new partner the new person who is giving the loan to the company, Calvin, is going to receive the same total amount of interest on capital which Ada and Brain were receiving in the past in the partnership. Next, issue $1 ordinary share to Calvin at par. The value of ordinary share issued will be the same as the 4% debenture in option 1. So obviously debenture value we have calculated that 4,80,000. So we are issuing 4,80,000 ordinary share to Calvin of $1 each. Calculate the amount of debenture to be issued in option 1. Or advise the director which option they should choose. Justify your answer. And the number is 5. So if we are going to issue debentures of 4,80,000, we are going to, it is this, temporary source of capital, and it has to be paid back to Calvin at some stage, debentures. And it is a non-current liability. Currently, the company doesn't have any non-current liability. So we can issue debenture, but we have to see that business will become risky. Maybe we have to give some collateral, some kind of security. Then financial statements should also be showed up. And then business will become riskier because the debenture will carry interest on interest. The profit will decrease, expense will increase, and profit is going to decrease. If we issue $1 ordinary share to Calvin, remember that our it is a permanent source of capital. We don't need to pay fixed interest on that because debentures carry fixed rate of interest, but we have to pay dividend. But dividend is dependent upon the profit we